we're in this strange no man's land when it comes to the trade war, particularly with the US-China trade war. Ultimately, I think markets are desperately trying to look through to a situation where not much actually got done on the trade side. I think that we have seen some nasty manufacturing PMIs out of China last week. I mean, the new order number was horrible. It looked like sort of COVID lockdown type numbers. But ultimately, I think most people are looking through to this whole trade war getting quite significantly diluted from here. I don't think that there is much staying power market-wise for a protracted process. I think people talking about trade wars getting sewn up in, or trade deals getting sewn up in days, is completely unrealistic. As a Brit, we learned very fast that trade deals don't get negotiated overnight after Brexit. And so I think what really the market is going, okay, something quite skinny is going to be the compromise deal that allows everyone to dust themselves off, save face, and move on. And I think that's what markets are trying to price right now. I think that downside in markets is probably more limited in China and other Asian emerging markets. But I think that US equities are currently pricing a complete sort of evaporation of the trade tension within a matter of weeks. And I just don't see that.
And what would be driving the markets now if it's maybe less so the Sino-U.S. trade war? Is it the policy that you're keeping an eye out on?
Yeah, I think, and I was on with your colleagues a couple of months ago talking about China consumption specifically. And I do see that the measures that China is taking to stimulate domestic consumption are starting to pull through. Consumer discretionary and consumer staples are two of the areas of the market in Chinese equities that I'm most excited about right now. And I think that the holiday data was encouraging that you just talked about a few minutes ago. And I think that the measures to stimulate consumption are beginning to work. Now, right now, consumption vouchers, incentives on white goods and auto purchases, that's fine. Ultimately, to really fix China's savings problem, i.e. they save too much, is to have consumers less concerned about things like healthcare costs and childcare costs. And what we're hearing about progress on measures to, take that worry out of the back of consumers' minds is really encouraging.
When we talk about some of the consumption that we are seeing, the volume of home appliances being purchased up 15%, automobiles up 13%. What sectors are you liking? What sectors should we be looking out for in particular?
Oh, I like the white goods. I like parts of the retail area, so sort of businesses like Miniso and Popmart, not cheap stocks by comparison to other Chinese equities, but certainly performing incredibly well. Big consumer giants like Xiaomi, but also on the staple side, I really like the beer companies, and less familiar for people outside the region, I like the Baijiu companies as well.
And when you talk about the likes of Popmart, the likes of Miniso, of course, they all came to the market and not so long ago. And we are tracking a little bit of a pickup in activity in terms of IPOs. Are you watching that at all? Contemporary Amprex is one name, of course, we were talking about just a short while ago.
In a prior life, I was an IPO banker in Hong Kong, Emily, so I'm watching the situation with CATL very closely. I think that's going to be a really exciting deal when it comes to the market. There are a lot of people that around the world that haven't been able to own CATL as an A share. I think as an H share, there'll be a long queue around the door for that deal. I mean, it's a beast. Like BYD, their emergence to sort of global dominance in their verticals is finally something that the rest of the world is waking up to. I think that's a really interesting deal. I mean, from a capital markets perspective, I mean, it's like a small follow-on for a company of that size, scale, and domestic liquidity. I think it'll go very well.
Yeah, you in your former life, you were also, of course, exposed to the EV space, and of course, you have extensive experience in that industry as well. What are you seeing when it comes to China and the diversification of its supply chains, its investment offshore in new markets like Hungary to build out for, clean energy? What are you seeing and what are you watching out for?
Well, I mean, both CATL and BYD are building in Hungary at the moment. I think the BYD plant is going to be open by the end of this year. I think a rated capacity of 150 to 200,000 vehicles. That's a big plant. And then they've got their next one in Turkey opening next year. There's even talk of a plant being opened in Germany, of all places, for BYD. So I think that's very much the shape of things to come. There'll be partnerships with European OEMs as BYD sort of bursts a scene into the rest of the world auto markets. Now, up until Liberation Day, I didn't think it was fanciful to see BYD open plants in Michigan, but I'm thinking after the tensions of the last few weeks, that's probably a bit less likely. But there's a large rest of the world to prosecute. Certainly, where I am down here in Australia these days, the numbers of BYDs on the road you wouldn't believe, and that's just come overnight in the last couple of years.
As we watch them expand these Chinese manufacturers into new countries, there are also countries that they are not going to touch. Maybe India is one of them. Are there any other regions or specific countries that China will not be expanding into?
Well, I sort of touched on the US, which I think is less likely. Ultimately, as the US is finding out right now, the terms of trade for dealing with the Indian market are quite hard. I think that India would probably be pretty low down the list in terms of a target market. Indians have got their own domestic auto industry to support and prop up. I'm not sure that they would want a competitor as quite as ruthless as BYD in their domestic market yet.